I logged into my local MLS yesterday. And by the way, MLS stands for Multiple Listing Service, and this is the place where realtors and others like me can look up information on homes such as the price it's sold for and how the market is doing in general. So I have many investment properties, and yesterday I decided to do a little research on what they are worth. I expected a slight pullback, or at least not to have gone up as much as they did since the beginning of the year. But boy, was I wrong. I tell you, I had a rough idea on several of them, but I was off like 10 or 20% of their values. It's crazy. I also looked to see what the average days on the market are, and they're moving up slightly, and also inventory is also moving up slightly. But when these two numbers, like inventory and days on market, move up, the market starts to slow. But I have to say that it isn't high enough to make a dent yet. We also know that interest rates are rising, and that means some will be outpriced to the market because the monthly payment will be too high for them. We also see a recession on the horizon, so how could it be that the market isn't crashing yet? Well, I've said that we're going to have another 2008 in about 2 years, and that reference to 2008 is the entire market, not just the housing market. But will it really be as bad as it was then? So I was reading an article on CNBC, and they made some good points as to why the market will be different this time. Well, let's review their reasons, and let's see if we agree or disagree. First of all, the article starts off with the fact that regulations are tighter. So the author of the article states that there aren't as many or anywhere near as many risky mortgages like there were before. The next paragraph, however, she talks about the fact that many people had equity in their homes and either refinanced them or took out equity lines of credit. She also explained that most have over 20% equity still in the house. And that was, and by the way, she also had an interesting statistic that she also referenced that total mortgage debt in the United States is now less than 43% of current home values, which is the lowest on record. It's a helpful point, by the way. She also mentions that adjustable rate loans that were prevalent in the early 2000s and how most people have fixed rate loans currently. Well, let me give you my opinion on all of this. First of all, her facts are probably sound. Not like when Biden said the stock market is at its highest and people have more savings and less debt than ever. That was a moment in time. And it already shifted when he said it. But that's exactly what's happening now. I've seen more and more advertisements and mortgage brokers hawking adjustable rates. You know, just in case you missed out a few months ago at 3.5%, you could still get that, but beware because in 2, 3, or 5 years, that number can jump to more than double. You also have to be careful of negative amortization or interest-only loans, which are out there, right? This would cause your principal amount to either go up or stay the same after years of payments, you know, like the student loans do. All of these are coming, and we also have the forbearance of mortgage companies that ended a few months ago. Some of these companies are asking for full payments, full back payments, and others have worked a deal to add it to the back of the loan. The problem is that many people who had been living paycheck to paycheck before the scamdemic were freed of the burden of the loans, and now they must pay them back. And it's a shock to many homeowners. I look at it this way. You know, look, we have new loan programs being created every day, and most of them, although it's not as bad as 2005 to 2008, are still pretty bad ideas for homeowners. We have the forbearance that's ended, and we have people about to be laid off of work. This, to me, is a real problem. I saw the other housing downturns in the 90s that had nothing to do with easy lending. It all had to do with an economic shift like the one we're about to have. The last problem was the crazy influx of money the government gave to you and I and everyone else, and that's part of the inflation problem as well. Money from the government is now all dried up, and the repercussions of that money are starting to show. The economy is starting to crack, and other numbers are pointing to a slowdown. The good news is that we still have about 2 years before the real cracks start to show. The good news also is that it may be time to refinance or sell your properties for a great profit, and a great time to learn how to buy properties without any money out of your pocket.